Hi, this is Zach here with the chart rundown here at Zach's Traders Cafe for Tuesday, the 7th of April. Starting off with the FTSE 100, which despite crude oil soaring overnight, it looks as though probably we're actually betting, if the stock market is betting on actually they're not being held fire unleashed on Iran later today. We see the market up near recent resistance, so towards 10,450 above that. Got the next level on the way down for previously at 10,640, and that's what we're looking for, especially while we're above that 50-day moving average at 10,365. Worst case at the moment, obviously, could be anything, but let's say the floor of the channel there at 10,300 would be the first stopping off point if we did have a rug pull. Moving on to the DAX, and here again, surprisingly chirpy. We managed to basically get up to recent resistance around 23,300, and looking for the area of the 50 and 200-day moving average at 24,000 over the next week or two, barring obviously Iran or World War III. On the downside, 22,600 Friday support, or the latest session support would be the place to look at. RSI is still not quite above the neutral 50 level, so if we do fail here, it would not necessarily be a surprise. Moving on to the Dow, and here I suppose the villain of the piece in some ways, perched at the moment just near the 200-day moving average, which is I suppose a good place to be perched. You can see that we've got there at around 46,600, looking for an end of day close above that to at least give us a fresh leg up to 47,400. RSI is still below a neutral 50, so probably want to see an end of day close above the RSI 50 level and above the 200-day line to know that we're on our way potentially to the top of that falling trend channel from December as high as 48,400. Moving along to the cryptos, and there was a beacon of light yesterday for Bitcoin, but the issue here is trying to get through the top of that falling trend channel. Haven't quite done it yet. We had a little peak yesterday, and still hanging around there. Obviously, exactly where that line is a bit of a movable feast. It could be like that. We're still below it, but still looking for a proper clearance, I suppose, now of an end of day close through 70,000 to give us a move up to 75,000 would be the hope. So that would happen sometime later during April. In terms of support, 66,000, the uptrend line from last month. And we're still not out of the woods to have a repeat of the November to January breakdown, or post-November, January breakdown happening in February to April. So end of day close through 66,000, and all hell could break loose. At least the RSI is just about on the right side of neutral 50. Next up is Ethereum, and here you can see we've got an uptrend line there running around the 1930 level. Above that, looking for the top of that converging triangle there at 2230, let's say. Best case, obviously, up to 2500 in the top of that falling trend channel. But you can see, in relative terms, Ethereum is rather underperforming where Bitcoin is on the chart. If we do break down below the 1900 zone, then obviously the February 1750 zone would be potential target there. Moving on to gold, and here, obviously, rather sidelined by the situation at crude oil, but here at least we managed to find support in recent days above 4,500 and looking for the top of the falling trend channel there, and the 50-day line there at 49.50 as maybe an end of April target. Surprising, obviously, that the geopolitical situation has not caused people to flock to gold, but actually probably caused people to sell their gold to cover losses elsewhere. Market at the moment remains crude oil, light sweet, and here we see it, the top of that rising trend channel. We were looking for 112, then 113, and I suppose at the moment we're just simply looking for potentially a retest of the spike that we had last month, and looking for that spike at the moment while we're above recent support there around 108. But at the moment, looking a little bit overstretched in the sense that we got bearish divergence or higher highs recently, but the RSI hasn't really pushed higher. And end of day close through or below 106 recent resistance could mean that we have hit the top. If there is a a rug pull, then the $99 area in the floor of that channel from January looked to be on the cards. Moving on to the stocks, and Atome is first, and here you can see that we're in a sideways range, but it looks as though we're quite chirpy at the top of that range at the moment. We've got 15 200-day lines rising, so looking for at least 81 pence by the end of next month, while we remain above recent broken resistance at 60 pence. So, a relatively simple chart there. T-Rex to see from BSF here, and certainly worked in terms of the charting. Here you can see that we bounced off the floor of that broadening triangle there. I had a great day on Thursday rather, and above the 200-day moving average there at 2 pence. We were looking for up to 4.5 pence, and hopefully if we can get another exciting RNS as we had today with a picture of a bag, then we could get up to 4.5 pence. Ideally, we stay above recent broken resistance around 2.6 pence. On to Delta Gold, which is the star in Aquis at the moment. Not that there's got much competition here. You can see there's a rising trend channel there from the end of January, the top of the channel there at 80 pence, and we're looking for that while we're above the floor of the channel here at 47 pence. 50 and 200-day lines rising, RSI 50 plus rebound as well, so it looks as though we are on our way, pure bond or no pure bond. On to Great Western, where I see some bright spark on X has made the connection between Great Western and Guardian Metal. Well, I suppose they both begin with G. We've broken through the recent resistance of 1.75 pence above that. Best case scenario for the ramper on X would be up to 2.7 pence. And looking for that as soon as the end of next month, is on the basis that actually the 50 and 200-day lines are both rising. And we've had a very strong day today as well in terms of the candle situation. But RSI 50 plus rebound as well. Rising trend channel there, and the upside certainly looks as though it's in place while we're above 1.6 pence in the floor of that channel. On to Kazera, and here you can see that we've got the shares bouncing back off an uptrend line in the RSI window, so it looks as though that falling trend channel there, 0.75 pence, is the floor. Above 0.75 pence, looking for up to 1.1 pence maybe by the end of next month, but obviously we need to stay within those parameters of that falling trend channel from this time last year. I was complaining that Mendell helium is not going up as much as perhaps it should compared to its peers, and this seems to be rectified at the moment. We hit our first target there at 5.6 pence. Above that we've been looking for 9.4 pence by the end of next month, and hopefully a bit sooner than that. You can see the RSI has remained above neutral 50 consistently since the beginning of last month. Another day, another RNS from MobilityOne. Not quite sure exactly what these sort of micro progressions from the company mean, or the RNSs mean, but certainly it's enough to get the share price breaking recent resistance at 11 pence, and we're still looking for 15.25 pence by the end of this month, or even sooner. Great performance there. Two RSI 50 plus rebounds, 50 and 200-day lines, both rising. On to MedPal, where finally the drip of RNSs from this company seem to be making some impact. We've gapped off the low, we've got bullish divergence as well, so looking for 4 pence, so maybe the first serious turnaround in the shares since they came to market, which isn't saying much. End of day close through the 50-day line, and we're looking for the 200-day moving average maybe by the end of next month at 6.3 pence, but I think even the company's closest friends would probably say that that would be more than enough in terms of expectations, given how soggy the market's reaction to the company has been to date. Ideally, we stay on the right side of the initial March support there, which was at the 2.75 pence level. Moving on to Pulsar, and here again responding better now. We've had a bit of a rocky ride, very volatile ride, but above our previous target there at 111, still looking for as high as £1.70 by the end of next month. Ideally, we stay above our recent hit target at the £1.20 level. While we do it, you can see we've had 2 RSI 50 rebounds in the recent past, and unfilled gap to the upside today, so looking pretty strong indeed there. If oil's up, then one would have thought that even Pantheon would go up, and even if it has another fundraise, you can see that the charting position pretty strong here. Multiple RSI 50 rebounds and an RSI 50 plus rebound of late. The initial target here of 14, I've upgraded the situation here up to as high as 19 pence by the end of next month if we can get through the recent resistance at 13 pence over the next few sessions. Not many people looking at switch metals, but just taking a guess here that the shares have bounced above a rising 200-day line. And as that is the case, it means that we've got an initial target here at 14 pence. Best case would be up to as high as 22 pence by the end of next month. Punchy call, but a punchy setup there from Switch Metals, bouncing above a rising 200-day line. Finishing off with Wishbone, which looks as though it's trying hard here to turn itself around. Still need to see it break through the 30 pence level, which is basically recent resistance. If we can get that, then maybe a trip back to the mid-40s by the end of the month could be on the cards. But obviously we need to get that break of 30 pence. That's it for me today. More updates tomorrow.